Hello, Warriors. Dale Pinkert here, aka Coach at TradeGATEHub.com. How's everyone doing? We're sponsored by TradeView Markets. Open up a demo and see if I'm being straight with you that you could trade everything and check out the spread. So I want to start off with dissecting the dollar here. And last week talked about the fact that, we had this breakout and it was an important level because of how it held. I have to go back to the daily and get back to this day right here before we went to 105. So the 102.30 level was a real important level on a monthly chart because you could go back years all the way back to 2016 and draw this slightly down sloping trend line that looked like a major breakout. Anyone that was bearish a dollar, they capitulated. This was a COVID high. People that were trading dollar index back then in 2017, they're veterans now. So now I want to go to a little shorter term and just show you how it's respecting the breakout that failed, that turned into a false breakout. So the number was 102.30. So now let's take a look at what it's done since we got through 102.30. So this was a breakdown day. It tried to close back above it and sold off to last night's low. We rallied up to it so far, unable to penetrate it. And right now the dollar is acting pretty weak. And that's in the face of higher yields, not sharply higher yields, but definitely in the face of the yen, which is something else that we talked about on Monday, that it looked like it may even take a shot at new highs. I still don't see it reversing yet, but yields do not seem to have the same energy, at least a 10-year. When I look at that candle on the daily and look at the 10-year, definitely weaker energy to the upside on the 10-year. So perhaps the 10-year could make it up to 3% if the yen makes new all-time highs. It could fail at any time, build out, rally back to resistance. Some people think we're going to make new highs. I don't. I do think that there's a chance for the bonds to try and take out these lows. Said this was a 4 and this was going to be a 5. Not sure if this is a low or not, but it sure looks vulnerable to me. And if it's going to do it, should do it during a period of US dollar yen strength, which is yen weakness, because they're not doing anything about rates. So we could get a new low in the 20-year and not a new high in the 10-year yield. Everyone with me on that? So the longer end of the curve, and this is the great steepening that Fed guy talks about, Joseph Wang, who I have scheduled for the end of June. And that's going to be a great interview. It gets a lot of visibility. He worked on the desk at the Fed for several years, left practicing law to, learn about the Fed and trading. And the guy is an insider at the Fed, so it should be really interesting to talk to Joseph when he gets here. So rates look like there's one more push down in the long end of the bonds. But what's happening is the markets are starting to, maybe all of this or most of it is priced in. It certainly is acting that way in the gold. When I left you on Monday, I said, look to buy a pullback in gold. So we sold half up here and put them back in. I gave you a number between 1830 and 1820. I think the number I gave you was 1826. The low was 1828, close enough for government work. Silver actually, didn't get down to the level I was looking for, only got down to 40. I thought we'd get down to 2120 or so. That is also resuming its upside, which is pretty impressive with US dollar yen up 77. But the interest rate pop that we're getting right here is showing very little effect on like I was showing you the dollar, the euro had a decent pullback. I said that it was due for a pause, but so far, very shallow pullback. I'm going to be patient in this, see what happens. We only pulled back 23%. Maybe it's going to just keep going. I've seen markets that when people miss the first wave off the bottom or first decline off the top, you know, you're waiting for a better price to buy it because you missed the first wave, and never gives you real deep retracement. But I'm going to be patient to look to add to my dollar shorts. If you're long gold, it's almost like a dollar short. But, you know, I think there's a possibility that we could still get a decline. What's really giving you a tell is Aussie's breaking out to new highs. So the 69.5, I don't know if it's viable anymore. Again, a commodity currency, also acting on the reopening in China. But the key here is what's happening in the dollar. Pretty weak. I wanted to show you the other line that it's holding. Okay, so it was this uptrend line that we had a throw over on, and so far that's what we've held at the 101 level. You know, back under 101, I think you're looking at 98, and under 98, you're looking at 91, back to major support. And actually long term, I think that we're going to take this out and trade in underneath the 80 handle. In the dollar, I know it's a contrarian view, but you know, you have to keep in mind that I would have liked to have been a fly on the wall on that meeting that President Biden had with Fed Chairman Powell yesterday. And I know that Powell is a student of history. And if you recall, the maestro, Alan Greenspan, was tightening into President Bush's reelection. And he got knocked out because we had a recession. And that's one of the many mistakes Alan Greenspan made, or maybe was intentional. But, you know, doing QT into the election and continuing to tighten, do you think that there was any political pressure put on Powell yesterday at the White House? If you recall, under the last administration, President Trump kept talking about, I want lower rates, I want lower rates. And, you know, this was before COVID. And definitely that was something else that Powell caved to the political pressure on that. So it's not that, you know, they say they're independent, but if they're independent, why do they have to keep telling us that? Because they're not. So, you know, there might have been something there. Maybe at the next meeting, Powell's going to go a half and then maybe even use the word, maybe we're going to pause for a while. I know the markets would like that. All the markets would explode, but a huge day in the gold, up 10 now. So if you bought it under 1830, you have 17 bucks made. This could end up being the big wave to the upside in gold. So here's the next areas. If this was the corrective low, this is what you look for next. You look for what happens here at the 1890 level. That was the breakdown, and eventually a breakout over 1930 is going to set it on its way to above 2000. I think this could be a tremendous move. If this isn't the bottom and we get one more probe of this low, that's okay. You know, I'm willing to risk all the way down to 1785. I don't know if I'm going to have another chance to buy silver down here at 2130. If it happens, I welcome it. I want to take a look at how the shares are acting. We are open now, so some of the shares that I've been talking about on this broadcast, actually, one was a takeover yesterday. It was Yamana. Obviously, the shareholders at Goldfields, which is a South African, didn't like the deal. And it sure didn't do much for Yamana either. Is it a takeover or a take under? anyway, pretty negative action there. In GFI, I still like Yamana. Maybe the deal isn't going to go through, but here's a look at something that I think looks okay. I'm really kind of surprised to see Newmont down with gold up $10. So the shares aren't really acting that well. Although here's SILJ, that's acting okay. Just didn't even have the pullback I thought we would have. Here's AG is up pretty big. It was on the verge of rolling over. These are the two juniors I like, and I'm still going to be patient with this. Still think I'll be able to buy it maybe at 330. It's not a chase to own them here. We did have a minor divergence here, but a confirmed low. And here's the other one that I really like because it had a almost 80-90% move off the bottom. I mean, that's about 20, 25, 30% move off the bottom. And I'm still going to be patient with this too. The message really being that, I love the metals. Okay, so far it looks like bullion's leading the stocks. It's actually not that great. It's better when it's the other way around. But I think you have to be accumulating these miners along with the physical as well. So I wanted to talk a little bit about energy and wrap it with the S&Ps. So we had this little 3 drive in UNG that I talked about. We had pretty good follow through yesterday. Okay, and I still think this is a potential top. But I think the biggest market that's critical to the inflation outlook, as well as important geopolitically, really, this is what's driving the inflation. It's almost become obsession. That's what everyone's talking about. Everyone's talking about, to see how much more this is and how much more that is. And yeah, everything's more. We have the everything shortage, but there might be some type of grand bargain between us and the Saudis. And this is the most crowded trade on the books. You can't find anyone who's bearish oil. And I'm not saying that yesterday's high has to be it. In fact, based upon my work, you have a confirmed high. Maybe we're still going to trade over 120. But, it's my view that this is possibly a failing rally. We're not at new highs, even though the distilled products are. And initially, if we start trading under this breakout, let's call this a breakout, back under 112 would be your first indication there's something wrong with the energy market. And if we ever see 94 again, that would really give the Fed also an excuse to pause. Maybe we have some type of break happening in crude that would give the Fed, a right to claim a victory lap, and maybe it's temporary, but a break in crude under $94 would solve a lot of the political and financial problems temporarily and take the heat off of interest rates going up and actually start driving rates down. Because, it's my expectation that once this yen rally is done, if we're going to make a move to new highs, that although the TLT, which is up today, see it, just a grinding little uptrend, maybe it will make it up to 222, but I'm telling you that we will see one more low in the bond market. I don't think this is the bottom. It looks corrective to me, and we need one more flush. So after that, though, when I look at the 10-year, and look how much weaker the 10-year is than the yen. So even if the 10-year got up to 3%, I don't think it's going to make a new high. Once we start taking out 272, That's close to 50 bips from the high that we had up here. It's going to take you down to 220. So that ties in with a weaker dollar, perhaps weaker energy prices, or a dip in inflation, or weaker economic data, and translates into higher precious metal prices because the opportunity cost of interest rates, even though they're still negative, they become more negative. And the dollar, yields, and oil are the big picture items. And I definitely like the way precious metals are acting. And so far, very impressed with how shallow the pullback was in euros so far. So far, you know, all you're looking at here, your fibs, 23%. I'm actually, you know, waiting for halfway to 61.8 back to be a buyer here. But your preferred long is go with the strength. So maybe buy some type of fib retracement in Aussie, since Aussie has really been leading the way. You just do your fibs from this low to, looks like it might stall here at some moving average resistance confluence, and maybe get a pullback to, you know, 70 still. And that's where I'd be buying the Aussie. So I hope that the gold calls have been pretty good, and the metal calls and the pullback in euro, and really pay attention to these two lines in the dollar for your next direction. Okay, back under 101.20, it's going to look negative, and that would really be a weak recovery for the dollar. And then back over the breakout, they could stretch the recovery up to 103.5, maybe 104. And I'd be fading dollar strength up here if that happened. Any questions before I go? Okay, Mike will be with you in 2 hours and 14 minutes. Our guest this week is Darius Dale. Darius has a very strong reputation for being a great market trader and forecaster, and doesn't use technical analysis, but has his own system for timing different things in the market. It's going to be a great interview. Be the first time I met and talked with Darius. So in the meantime, good hunting. You know, we were right down here in the gold. We were right to take half here, and it was right to reload. And with that, I hope I'm adding value to what you're trying to accomplish here. Being a trader is not an easy task. If you're new, the best thing to do is set up a demo account. You could do it with TradeView and get used to the platform, and don't go live for at least 6 months, and journal even your demo trades. So remember, like I end every broadcast, don't just count your pips, count your blessings. Tune in for Mike in a few hours, and I'll see you tomorrow with Darius Dale. Adios.